Today, markets have been jolted by some disturbing news, contrary to economists seeing diminishing risk for the United States to fall into recession. Fitch lowered the country's credit rating. Yesterday, Fitch Ratings downgraded the U.S. long-term rating to AA+ from a AAA. The agency cited possible fiscal deterioration over the next 3 years and a growing debt burden. Fitch also recalled political standoffs and last-minute resolutions over the debt limit that had eroded confidence in the country's fiscal management. The U.S. authorities disagreed with the Fitch downgrade, with the U.S. Treasury Secretary Janet Yellen calling it arbitrary and based on outdated data. Notably, credit ratings are used by sovereign wealth funds, pension funds and investors to assess the creditworthiness of the United States, which in turn has a severe impact on demand for government bonds. Nevertheless, yields on debt securities have been stable so far. Investors are in no hurry to flock to safe haven assets. It seems market participants have taken a wait-and-see approach. Meanwhile, the American Petroleum Institute reported that the U.S. crude oil inventories slumped by a record 15.4 million barrels. Despite this, oil prices posted modest gains. Apparently, the news stunned investors. In this regard, today's data from the U.S. Department of Energy is particularly important. If data shows not a record but still a significant drawdown in stockpiles, oil prices will most likely rise above $86 per barrel and perhaps even try to overcome the $87 mark. Meanwhile, gold spent the previous trading day in a downtrend. In a day, the yellow metal dipped to $1,945 from $1,970 per 3 ounce. Now the market is trying to claw back some ground. It's hardly surprising after such a steep fall. The market obviously needs to calm down, and thus the asset is likely to stabilize at around $1,950 per 3 ounce in the next 24 hours. The Russian currency seems to have found a new equilibrium in the range of 91 to 92 rubles per dollar. At the same time, the market sees regular breakouts of these boundaries. At the moment, the boat is trying to overcome the upper one, but these breakouts are local in nature. The situation will change dramatically only after major market players are convinced that Russia's current account surplus is at no risk and is likely to widen. Rising oil prices could become a driving force. However, the current rally is rather erratic and will soon give way to losses. So the market is still in a wait-and-see mode. Furthermore, the ruble has repeatedly proved its ability to stand still for long, so things will hardly change in the short term. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.